Mike Sintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning as usual on September 19th. So the big news of the week, of course, was the Fed cut by a quarter point, which was, very well expected. The market's actually been running higher really since the start of the month, probably in anticipation of it. And overall, most indexes, most stocks and stuff are up on the week, which is to the good. I would say near term, we're a bit extended. The good news is out. Like I said, we've been running here for 2 or 3 weeks. We've obviously been running here for months. But just near term, there's a lot of things sticking straight up in the air. There's a little bit of speculative activity. Some of the more speculative names, some of those are popping higher. So it wouldn't surprise me if, you can say this every week, and I probably do. It wouldn't surprise me if we do get a Shake the Tree event late September. Not predicting that at all. Just saying, you got to keep your feet on the ground, okay? Bigger picture, the outlook remains very good. I'm not going to get into the study, but the pattern that we've seen here in the last many months, but including the strength off the lows and the persistency, by the way, off the lows, has a very high likelihood to lead to nicely higher prices down the road. No sure things, but that's what the odds favor. In terms of individual stocks, my main thought is just taking things on a stock-by-stock basis. There's some names that are very strong and sticking straight up in the air, and you should probably be raising stops, or even you could take a full profit, you could take partial profits and, raise your stops, something like that. Just have a plan in place for what to do, because of course there will be pullbacks, there will be tops, things like that. Other names, however, are fresher. Some of them are emerging now. Some of them emerged maybe last month and have consolidated for 2, 3, 4 weeks here. Maybe they gapped up on earnings in August, that sort of thing. So it just kind of depends what you're looking at, what group, what individual, even within the same group, what individual stock, and I'd just be handling those differently. In Cabot Growth Investors model portfolio, of course, growth stocks have been, retail software, crypto, payments, really haven't been doing much. So we're still about 38% in cash. We did do a little bit of buying here. I will say, if the market behaves itself, or say we get a modest pullback, but a lot of stocks sort of hang in there pretty firmly, a little bit of a shakeout. There are about 3 or 4 moves I wouldn't mind making, but, we kind of have to see how things play out here in the near term, okay? But we're about 38% in cash, which seems high, but given the growth environment, makes sense to me. But, if things really kick into gear, that could go down quickly here, at least, especially if the growth, the buying in the growth stocks, the growth areas picks up steam outside of AI. Okay. That's enough for the intro. Let's hop into the charts. As usual, I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. Get out my pen. So we'll run through the indexes as usual. You can just see what I was saying here. This is the NASDAQ. It kind of lifted to new highs. It's kind of been straight up here for a couple weeks. That doesn't mean we have to come down. Doesn't mean we have to top. Nothing like that. But just, it's a little hot and heavy out there. Today's an options expiration, which can cause volatility, but we're just a little bit extended. So maybe we go up further, then pull back. Who knows? But either way, the intermediate term and longer term trend are pointed up. That's the most important thing. But short term, a little bit extended there. S&P 500, not really. I wouldn't say extended, by the way. It's not so much percentage wise. It's more just we've just been running. A little bit complacency on the weekly stuff. Just some of the shorter term things we look at are a little bit stretched. S&P 500 looks fine. Not a lot of volatility, a little bit of a shakeout if you squint, really look at it on that Fed day, but hitting new highs, that's obviously to the good. Small caps have been, I think, the strongest performer before today, so we'll see how it plays out this week, in terms of reacting to the Fed news. I will say, though, that small caps have just kind of, as opposed to the big cap indexes that have done this, they haven't really done much here in the last 3 or 4 weeks. Is that meaningful? We'll find out. At this point, no, it's not meaningful. We're still above all moving averages, but just something to keep an eye on, okay? Mid caps, same sort of thing. Haven't really been able to break free. New York Composite, all of them are positive intermediate term. New York Composite looks pretty good. All of them are positive intermediate term in terms of the trend, but, a little bit of stalling here and there. We'll see what happens. Growth stuff has picked up, which makes me happy, okay? This is the Momentum Fund, which is not, like JP Morgan can be a big holding of this. So it's not like a perfect growth measure, but you can just see, and I had mentioned after, really from late June into really through August, you basically had no net progress on a lot of these. Sometimes they went up, sometimes it went down, but really not a lot of progress and a lot of volatility there too. Obviously that's changed a little bit here into September, so we'll see how it goes. Same thing with the equal weight NASDAQ 100. It's not free and clear, but again, it's picked up a little bit. Even the old IBD 50, which has been a big laggard, And again, this is just a screen from Investors Business Daily. As far as I know, it's a screen where, good relative strength, good earnings growth, stuff like that. So it's kind of the pond that I fish in. But you can see, again, you've seen a little bit of a change in character here the last few weeks, which is what we're seeing now, is a little bit of broadening in the growth stuff, a lot of medical, some bull market stocks, some other areas, some internet, stuff like that is picking up, not just, AI networking chips, power, that sort of thing, which has kind of been where obviously a lot of the action is. Okay. I'm just running through a few things here and then a couple of comments before we get into stocks. 10-year note, it has bounced here since the Fed, but obviously in a downtrend. I can't pull up the 2-year note. I wrote about this in Growth Investor this week, but it's this is the 5-year note, so it's kind of similar, not exactly. But the trend of rates is down, Treasury rates is down, and now it looks like the Fed will be cutting at least, I would think at least one more time, right? It seems like they projected at least 1 or 2 or 3 more. But this is the 5-year note, and if you can just see, it's been kind of testing here, and a lot of these Treasury rates have been testing some, 2 to 3 year support levels, I guess, for the yields, which means if you fall below it, that would be good, lower interest rates. The 2-year note kind of banged on it exactly. So what I'm trying to say is what happens from here will be key. If we see sort of the 2-year note, especially, which is very sensitive to what people think the Fed will do, it can bounce for a couple weeks, don't get me wrong. But if it starts to fall and really set new lows, same thing with a 5-year note. If we start to see it down here and it's hitting, multi-year lows, say it falls down here, that would be, excuse my bad drawing here, but, that would be a good sign that there's really a change in the interest rate regime, which obviously, whether it's near term or long term, would be positive for the stock market. Okay, so that's number one. Just a couple other things on sectors, just running through some things, just noticing that this is the XLI. Again, we've seen this from a lot of stocks here. Nice, very, very nice run into mid to late July, and then it's just been marking time. So again, you just have I don't want to say a dichotomy like it's negative, like a divergence, but you just have a lot of cross currents. You have some areas and some sectors base building, looking for breakouts. You have others that are sticking straight up in the air and look like they're not topping out, but could be ready for a pullback and to take the next few weeks off. So XLI is one of those that's setting up, so just kind of keep that in the back of your mind. XLF, which is financials, just kind of I'm just noting it because it's not, again, I'm not trying to point this out as some red flag, but it's not really, you think Fed is cutting rates, broad market looks good, financials should be leading, and they're not doing bad. Again, they're in an uptrend above the 50-day line, but they're not really doing much. Net, they really haven't done much here for a couple of months. So just something to keep an eye on. Don't get me wrong, the fund hit new highs a couple of days ago, so good week next week. It's like, hey, financials look great, but I'm just kind of keeping an eye on it because it has stalled out here a little bit while the big cap indexes have been doing this. It's been kind of doing something like that. So a couple of bad days would be sort of interesting to say the least. Last but not least, on the sector front, once again, just XLP. It's not like XLP is going down, therefore you must be bullish. But usually, or at least frequently, you will see defensive stocks perk up, either coinciding with a market pullback or ahead of time. Usually, sometimes weeks ahead of time. And really, we're just not seeing that. So money's kind of flowing in and out of these different areas. You might see another rotation going forward. I'm not predicting that, but we'll see how it goes. But you're not seeing the money go into defensive stocks, which is pretty good, okay? Just before we get into stocks, this is a couple stocks, but just number one is we're still seeing kind of what I call the chop factor, which is something looks good for a few weeks. This isn't across the board, obviously, but there's many names that look good for a week or 2 or 3, and then some news comes out or some downgrade or some rotation or whatever, and it's just boom. So here's like Insulet, reacts well to earnings, big volume, starting to march higher, and then, don't get me wrong, could easily pull back, but then, a competitor got approval for something, and then boom, it gives up most of its gains in, a week basically. Okay. Cameco, which by the way, it's on, it's something I'm watching. It looks fine, but I'm just noticing like here's a big breakout on, I believe that was Monday, and then the very next day kind of comes right back in. Now it's kind of marching higher again. So there's just a lot of that going on. I know when you're looking at the S&P, you're like, Mike, what are you talking about? We're going up, 0.5% a day or whatever, or 1/3% a day. but there's a lot of this sort of action among individual stocks, even within, within the nuclear space. Some are shooting higher, some look bad, some are like Cameco and chopping around. So it's just really, like I said at the outset, sort of a stock by stock situation. The other thing is just, if you have something nice, this was a shorter term thing in top 10. We had bought it just a couple of weeks ago. But if you have something you bought, hopefully you bought it a few weeks ago and it's really, really up. But if you bought it, even if near term, and all of a sudden 2 weeks later you're up 10, 15, 20%, make sure you're following along with a stop loss, at least a mental stop. Maybe take some partial profits. We advise doing something like that today in KTOS. There's a lot of them, like, again, this one's not setting the world on fire, but, Construction Partners, ROAD, Road, just kind of stretched higher. Obviously, if you have something like a Sienna, some of these names that are super hot, gaps up really strong, I think these things can go higher over time. But number one, I could be wrong. Number two, the market's a little bit, I don't want to say frothy, but it's a little bit complacent right here, a little bit stretched. And so is the stock. So, consider either raising your stop to break even or selling a little bit, and so on and so forth. My bigger point is not that there's a perfect way to handle these, because there's not. It's just about having a plan in place and following that when you have some stocks that are really shooting higher. Not to go on a tangent, but I read a psychological study years ago that actually had 4 different scenarios. Stock goes up, like you buy it, a stock goes down, buy it, a stock goes up a lot or goes down a lot. And I think like the second most stressful situation, or one of the most stressful situations, is you buy it and then within 2 or 3 weeks the stock is up a lot. And you think that doesn't make sense, but it's stressful because you kind of feel like you have to make a decision. You don't want to lose the profit, and all that. So the way you get around that is just to have some sort of plan. If you don't have one and you have some hot stocks, it's a good problem to have. Just spend some time this weekend thinking about that, okay? In terms of individual stocks now, okay? This is Madrigal, I think, MDGL. It's a biotech. It's a one-drug firm. They're still losing money, although that should change here in the next a few quarters from now. But you can just see, I guess you can say a big base, but just more recently just kind of had this structure, broke out on the upside, and now, again, you have about 3 weeks of consolidation in here more recently on the daily chart, hitting the 25-day line. Obviously, maybe it fails, but, it's a pretty good risk-reward situation where if things kind of fall apart, it's not like you're taking a 30% loss or anything like that. ALNY Lamb continues to look pretty good. ALNY, again, the weekly chart, big breakout here. Nice kind of advance beforehand, but didn't really change character until after earnings. And again, now you have, if you count it out, about 4 weeks of consolidation in here as the 10-week line, tries to catch up, and the 50-day line, there you go, 50-day line wants to catch up here, in the days and weeks ahead, okay? Again, in the medical area, Gene DX, WGS, this one's definitely a wild child. I mean, this week was brutal. And frankly, that week is it's a little abnormal, even though the stock has recovered in the sense that, what's the sponsorship really there? But sponsorship has been gaining pretty quickly here the last few quarters, and obviously the stock's been acting well. And now you have the name, back to the daily chart, basically consolidating in here for the last 3-4 weeks type thing, as the 25-day line's caught up as the 50-day line tries to catch up, okay? Blackstone, I mentioned this last week. I don't think it's going to set the world on fire. I mean, unless the Fed just cuts rates by, 100 basis points without any recession or something like that real quick. But I do think, to me, this looks like we'll see how it plays out, a very proper, cup with handle, if that's your game. A lot of tight weekly closes in here. Nobody's talking about, bull market stocks or Blackstone. I'd like to see it get a little bit more of a head of steam, but it's kind of intrigues me. It's on my watch list. Again, it's not going to be your fastest horse, but the stock does have a history of trending. If you go back to the monthly chart, the stock, this is, went from 50 to 150. This was post-pandemic. Now, that was when the Fed was buying everything that wasn't nailed to the ground. So that I don't think we're going to have that type of liquidity, but my point is the stock can trend when things are good. Tempest AI, a little bit more speculative. I mean, it's still losing money, but growing very rapidly. And you can see the stock's been very wild here in the past year and a half. But this pullback right here, or this consolidation, whatever you want to call it, was a little bit more proper. And now shares have kind of staged. I mean, I don't want to give labels, but it's kind of been, again, there's a lot of choppiness. You can just see it breaks out, it pulls back, it rallies up, it comes back down. But overall, stepping back, it seems to be trying to trend higher here. A little bit of resistance to chew through, but that one looks pretty good. Cloudflare's been sort of a liquid leader here. I'm just mentioning it because if you look at the relative performance line, it's been kind of consolidating here now since late July, like a lot of these names. And it's been finding support near the 50-day line, 25-day line this week, kind of shook out, bounced back. So overall looks fine, not a bad risk reward around here. Maybe you wait for the relative performance line to confirm on the upside. You could look at this, it's like artwork sort of thing. You could look at this and say, well, it's losing momentum a little bit. And that might be true, but my thing is if the RP line can kind of come out to a new high, could be a decent risk reward situation. Carvana, CVNA, I will say this one's had a giant run over the last couple of years. So I wouldn't say my confidence level is, 99%. And then you have this, what's kind of called an iceberg in here, where it has a very strong day, but clearly they were selling on that strength. You can see right here on the news. So they sold that day and it just kind of came right back in. But this is when growth stocks were kind of struggling, and the stock has held firm, basically held the 50-day line. And now it's perking up again. 400's round number resistance. I'm not saying $400.50 is a buy or whatever. I'm not saying it's a buy at all. But overall, it's an interesting consolidation here with, a lot of tests of the 50-day line, not a lot of progress here the last few months. Maybe see if it can change character going forward. While the Fed has cut rates, some of the housing stuff kind of ran ahead of that. It's been pulling back, no surprise. This is top build, BLD. You can see, on the weekly chart, again, no surprise. Out of favor for, a few months, many months. But then changed character, had a nice up move here. And you can see on the weekly chart, very tight in here as it tests the 10-week line, 50-day line. Okay, maybe you do whatever you want with it, but a decent setup. AWI, which just, we took our profit in top 10 a couple weeks ago, but I'm always, we could take it and get back in top 10. But you can just see, nice move on earnings here. And then just kind of nice tight consolidation here south of 200. We'll see what happens if the market pulls in. This could obviously pull in more, but so far, nice setup. I keep mentioning MongoDB, MDB, not because I have to be honest, the growth profile it's good. It's not great in my opinion. But I am intrigued. It's just been, you can just see how sloppy. I mean, it's just so many bad reactions to earnings and all this stuff for a while. And even if you go back further, it can be pretty choppy. But this volume was pretty much out of this world. You can see the weekly chart, it kind of went higher. Now it's come back in. So it's seen a little bit of selling in here. But the bottom line is it's basically been consolidated. Like I said, it kind of like earlier in the issue, some of these things emerged in August and then consolidated. So now we've seen that from MDB. So maybe a entry point, presents itself. I'm just going to mention CRWV. This is CRWV. I don't see a setup here, but a lot of times these IPOs, they're wild. They're not going to perform exactly like textbook. And obviously the stock had a massive run, and then it had a big correction. It's a very big correction. Basically got cut in half. I think it did get cut in half. Or more, okay? But now we've seen a little bit of buying come in here. My guess is it's not just going to ramp back up, but who knows? My guess is you're going to get sometimes these IPOs after they have their initial run and then a correction, the initial post-IPO run, you get kind of a consolidation period. And my thought with this sort of volume clue is maybe the stock is bottomed and it just needs some more time, okay? Still growing like hell, still very, rapid growth. EBITDA's, I think, positive. The earnings metrics are improving is what I'm trying to say. So just something to kind of keep on your back burner. I don't think there's anything near term unless you're a short-term trader, but just something that when I saw the volume clue and sort of the action and the fact that it's an IPO and, of course, the fundamentals, just something to keep an eye on. And then last but not least, sort of a group is just, Chinese stocks have really... looks like they've really decided, 5 times in the past few years, it looks like they changed character. Right now, I think they finally have. This is BIDU. I think that's 5 out of 6 weeks in a row of big accelerating buying volume. Obviously, the stock's gone wild. I'm not sure what you do with it here. Maybe sometimes these things don't pull back. Sometimes these things, of course, might pull back.
10 points on Monday. So we'll see what happens. Alibaba, which I think I mentioned last video. Here's the monthly chart. Obviously out of favor. This was your bear market decline, big bottoming area. It's kind of thrashed higher and lower here recently, but you can see now it's kind of cleared out to multi-year highs, on the monthly chart. Here's your volume confirmation here, big volume on the initial move there. Coupang, which is not Chinese, but just notice that the stock had this nice, what I like about this is right here, sorry to ping pong between charts. This is the weekly chart, 2 big weeks on earnings back in May, I think it was, to break out. This is a big company, okay? They have, last quarter was $8.5 billion in revenue. And then it had a nice run, and then it corrected, it got hit, but nothing abnormal. And now it's built this new base. And then again, a couple of weeks ago I don't even know what the news was, but the stock had amazing, volume on the upside, and it's acting well since. So what's the point? The point is some of these international Asian online companies are acting well. I know SE's been doing fairly well as in the same thing that's a little bit more diversified, but that could be a theme to watch going forward. All right, back to the market. It's really not too much. I don't want to sit here and you can always say when the market goes up, say, oh, it's short-term extended. I would just say we've had a good run here. We had 3 tests in the summer we held. Now we're extending higher. Let's see how we handle this. The good news is out. Late September is usually tricky. Early October is usually tricky. Is it rotation? Is it a pullback? Is it nothing? And we just kite higher from here? We'll have to see how it goes out. But, the main trends are up. I would say most stocks are doing well. But again, I would just make sure you have a plan for your stocks based on what they're doing. If they're sticking straight up in the air, have a plan to maybe take partial profits or raise your stop or both. If they're basing out and they look like they could be fresh buys or add-on buys, have a plan for where you're going to do that too. There's a lot of cross currents out there, so you have to take each one individually. Okay, that is enough time for today. As always, thanks for listening and watching. Be sure to come by again next week for another Cabot Weekly Review.